Hey, good morning again, everyone. Mark Contra here at the Messer Financial Office. This morning we're going to again offer you the opportunity to learn a little bit more about one of our carriers and the products that they provide. This will enable you, of course, to go out there with greater confidence as you meet your clients and present the information. Just a couple of housekeeping issues before we get started. The first one being make sure that your phone is on mute. The system has muted you out, but occasionally something will slip through. Again, too, if you have questions during the presentation, use that question box over there on the right-hand column. Type those questions in, and we'll go ahead and address those questions when we finish. Again, also, please stay with us until the end so that you'll have the opportunity to hear the incentive bonus that will be provided for your sales with this product. With all that in mind, let's begin. This morning we have Chad Knies with us, the Eastern Regional Vice President with OxfordLife Insurance. And Chad this morning is going to give you some great information on the products that they have. Good morning, Chad.
Good morning, Mark. Yes, thank you very much. Appreciate the opportunity, and thanks everyone for attending. Thanks to Messer Financial again for allowing us to come in. I'll go ahead and get started, and as Mark mentioned, just want to first introduce myself. I'm Chad Knies. I'm the Eastern Regional for OxfordLife. I put my contact information up on your screen for you, so any specific questions you might have for me, anything at all I can do for you at any point, at any time at OxfordLife, you can reach me directly at 866-626-7532. That's my mobile number beneath it, and my email address as well. Those are the states that I represent, but again, that really doesn't matter, no matter where you might be joining in from today. If it's something I can do for you, something I can help with, please reach out to me directly. Want to take also the opportunity just to introduce everyone a little bit more to OxfordLife. Some of you might be new to us, some of you may already be appointed, contracted, but it's always nice to review a little bit about the company and I guess where we stand currently. As a reminder, OxfordLife, we're a leading provider of senior-oriented life insurance, Medicare supplement, and annuity products. Now, I think one of the many great things about OxfordLife, if you've appointed with us or if you're looking to and you're going to appoint, you have access with one contract to any and all the OxfordLife products. We're going to talk more specifically today about the final expense, but we do also offer a single premium life product. We will actually touch on that one a little bit just because, again, it has a lot of similarities to our final expense in the underwriting process. We also offer annuities, a couple versions of them. We do 3 different fixed indexed annuities. One certainly gets some attention just because it is a 10-year product with an 8% bonus. And anybody in the annuity space out there knows that that is tough to come by these days. So again, a true 10-year product with a real 8% premium bonus. In addition, we offer multi-year guarantees. We do 3 through 10-year durations, and those rates are probably some of the most competitive out there in the multi-year guarantee space. So if you're just looking for some of those CD alternatives, we've got some great opportunities for you. And then finally, Medicare supplement. This is probably a little bit newer in our arsenal. We've acquired and we've managed MedSup business for a number of years, but probably about 3-4 years ago we really got a little bit more aggressive in the distribution. So we still have some plans and some approvals coming around. We will have a Plan G just a couple months away, but right now our Plan F N in a number of states is quite competitive on rate, and shares, again, some similar underwriting process that we're going to talk about today with some of the product lineup. Now, OxfordLife, we're based in Phoenix, Arizona. We have been since 1965. And as the bottom line there states, and just kind of reminds us that we really operate more in a senior space. All of our products have a senior focus. Now, a little bit about OxfordLife and some of our corporate structure. This slide's always fun just because even agents that have been with us for a while sometimes forget some of our corporate structure. We're owned by Amerco, and I always like to spell it. It's A-M-E-R-C-O. I spell it because everybody always likes to drop another vowel right there in the middle. We have no affiliation to Americo. Everybody always likes to kind of put us together, but Americo is really just a financial holding company. They own Oxford Life Insurance. We own North American, Christian Fidelity, Dallas General, a couple other of insurance acquisitions along the way. The majority of our product today is written through OxfordLife. That's kind of the primary insurance shell. Now, over on the right-hand side of your screen, that is U-Haul, as in U-Haul, the moving and storage company. I know it's an interesting fit, moving and storage along with insurance operations, but the nice thing about it, it does bring a little bit of a brick and mortar feel sometimes to Oxford Life. Maybe you or maybe some of your clients don't know Oxford Life, but I'm willing to bet, as about 90+% of America does know, U-Haul. They've rented one of the trucks. They've seen the storage unit on the side of the street. So again, it does certainly have brand familiarity. Not to mention, we are publicly traded. We trade under the ticker symbol UHAL. So anytime you or your clients want more information, you can always just go out there and search or pull up our ticker symbol. You've got full disclosure to any and all of the Oxford Life financials, as well as our parent company in U-Haul. Not to mention, before I guess I move on, I should also point out one other thing. We have a lot of shared services with U-Haul to take advantage of. Our corporate operation in Phoenix, we have the U-Haul buildings kind of up front. Oxford Life operates right behind it. But shared resources in the way of our HR, our legal services, and if you've ever ordered supplies from Oxford Life, you might notice they arrive in a U-Haul box. We ship all of our materials out from a U-Haul facility in the Midwest. Now, let's just kind of pull Oxford Life out of that for a moment and look specifically at our financial strength. We've been recognized by a few different independent third parties, most notable, AM Best, for our financial strength. We are currently rated A- excellent by AM Best. Matter of fact, we just got together with AM Best about 2 weeks ago for our annual review, and as those annual reviews go, we'll know the official outcome of that probably in about another week or so. We don't anticipate any changes. I guess maybe knock on wood, a positive outlook or something along those lines, but looks to be business as usual, which is fine by us. The A- excellent certainly does assure some confidence in Oxford Life and again our financial strength. We've also been included to the Ward's 50 for 3 straight years back in 2011 and 12. Anyone familiar with that one? Ward's picks among 800 different insurance companies to put 50 on their list based on certain performance indicators. Now, the reason we're pretty proud of the financials of Oxford Life, we're certainly not the biggest company out there. We're about 1.7, 1.8 billion in assets. And again, that's just looking specifically at Oxford Life. But we are a very financially sound, I guess, cash-rich company. An example, our B-CAR ratio is about right at 300%. Just to put that in perspective, the requirement for any A++ rated carrier is 175% or greater. We've operated at that level or better for each year over the past 7 years. So it's not like we just popped up to that percentage, threw it out there and think, oh boy, that looks great. In addition, we have some other pieces that'll help you out if you're looking to kind of really hit on Oxford Life's financial strength. Our standard analytical report, as that one always shares, we have about $116 in assets for every $100 in liabilities. And if you recall, the average among the leading 25 life insurance companies out there is about $105, $106 in assets for every 100 in liabilities. So again, we're well above and beyond that. And again, that just goes back to some of our financial strength and I guess kind of cash on hand. So when you consider and wondering why do business with Oxford Life, we certainly think and hope financial strength is one of them. In addition, unique and competitive products, of which we'll roll through here today, top-level commissions, really with all of our products, all of the life products, the single premium life, the final expense, and even that Med Sup, time-saving, convenient. It's point-of-sale, rules-based underwriting. Superior producer customer service. I always think that's one of those things you need to prove more than you just say or talk about. Hopefully, if you're already using us, you had the chance to see it firsthand. And if not, hope we get the opportunity to show you. In addition, we do a number of different training webinars. We have personalized services from promotional pieces we can put together for you, final expense flyers. We still do offer some direct mail cards we can personalize for you, a number of different items like that. And then underwriting support whenever you need it. We're going to talk specifically about that here today as well. Now, before we move on, I want to talk just a little bit about the opportunity for final expense. Now, I mentioned a little bit ago, OxfordLife, we operate in a few different spaces, but I think if we were forced, maybe forced isn't the right way of saying it, but if you were asking us what is our flagship product, I tend to say that it is our final expense. And the biggest reason, it is the opportunities ahead. A lot of people think, well, this market's become saturated and it's tough. It's so many people out there, but the thing we need to remember, there is still so much opportunity ahead. There's so many baby boomers out there, and I know we get hit over the head all the time with these numbers, but the first baby boomers turned 65 in 2011. Now, the U.S. population age 65 and over is going to double by 2030. That means by 2030, almost 1 out of 5 Americans, about 72 million people, are going to be age 65 and over. So again, such a huge space, such a huge market when it comes to insurance and specifically final expense. Most notable by that bottom line, 31% of seniors age 65 and over don't have insurance of any kind. Now, that's any insurance. That's final expense, that's permanent insurance, that's term insurance, whatever it might be. So they are uninsured. And a big reason, I guess, when we think about it, most people carry life insurance through work. And whenever you turn 65 or whenever you've left work or you've left your primary employment, typically you're going to see that coverage disappear. So again, it leaves most Americans, most people uninsured at a time when they're really most dependent upon it. Because let's face it, final expense isn't a kind of a flashy product. It's not a vacation. It's not a new car, a trip around the world, anything like that. It is something our clients are going to use, something they're going to need. The average cost of a funeral in 2012 was $8,343. That doesn't take into consideration inflation. Throw that into the equation. By 2030, the average cost of a funeral will be over $14,000. And as we know, at least today, there is no government-sponsored death benefit that's going to provide enough. For those who qualify, Social Security is going to provide or offer a one-time payment of only $255 to a spouse or minor child. That's it, $255. And whenever we're looking at a possible $10,000 to $14,000 final expense, $255 barely covers the flowers. Now, if someone's a veteran, unfortunately, even qualifying, they're only going to be able to get $300. So again, it's just simply not enough. Now, it's not enough whenever we identify and we sort of itemize what are some of the traditional final expenses. This screen here, always like to point out, it's listed on the back of our product brochure. And we always have a number of people that mention how beneficial this is. And I guess beneficial, like anything, when used the right way. The product brochure, nothing terribly exciting about it. It goes through OxfordLife, who we are. It goes a little bit through the product. But whenever you flip it to the back, it has these traditional final expenses listed out, but more importantly, over to the right-hand side, it's got a place where you and your client can sort of itemize and fill these things in. So, an example, you can right there say, okay, Mr. and Mrs. Smith, what do you expect to be the average cost of a casket or urn, a cemetery plot, burial, cremation expenses, funeral home or church services, any and all these things. Of course, you know some of these figures, or you can pull up the averages in your area, whatever it might be. But the thing is, your clients are floored whenever they see these things firsthand, or just as we know, anytime your client writes something down and you total it up there at the bottom, it comes a little bit more real. So now all of a sudden you're seeing, okay, a casket might run, $1,800 to $2,200, depending upon your area. Combine that again with everything else, and all of a sudden there you are staring at that $10,000 of final expense. Not to mention, as the next slide shows, there's always those additional final expenses. There's always those things that we don't know about, but they're inevitably going to come up. Unpaid medical bills, Medicare deductibles, emergency room visits, ambulance costs, any and all these things. We always use the example, Dad passed away years ago. Mom just recently passed but was still living at home. There's a pretty significant expense. How long is it going to take for the home to sell? 3, 4, 5, 6 months. During that time, who's going to cut the grass? Depending upon where you live, who shovels the snow? Just general maintenance and upkeep of the house until any and all that takes place. So again, a lot of unanticipated expenses when it comes to final expense. So we always like to say, at the bare minimum, shouldn't we go back and address some of those traditional final expenses, some of those things from the earlier slide that we can actually wrap our arms around, things that we know are going to pop up? Because as we know, clients don't want to be a burden, especially at that point in time after they pass, to their kids, to leave those final expenses to them. Now, we've got a few different ways of going about it and paying for it. One is our assurance. That's our traditional final expense product. This is a non-participating, it's a level premium whole life product, and it's designed to provide, again, guaranteed death benefit to help people pay for those final expenses. Now, we also offer Assurance One. This is a non-participating, it's a single premium whole life product, again, really aimed at the final expense marketplace. Nothing real complicated about this. We've got Assurance, the traditional. We've got Assurance One. That just means, again, one payment, one time, single premium, you're done, and it's paid for. And we'll talk about that one just a little bit more in detail here in just a bit. Before we do, I want to bring up a slide that's been really popular for us, and really in a number of product lines. It started out with our final expense, but we learned some of our top annuity producers, this thing has been just as beneficial in an annuity presentation. Ways of really just kind of uncovering assets. It's sort of the ultimate fact finder, I guess, if you will. And I think the big reason, because it's so unobtrusive, you're really just going to roll through and ask your client a couple quick questions here, but it always seems that they volunteer a lot more information as you walk through it and you go through it with them. One little idea with this piece, it's available on our website. You can download it there or just contact us. We'll send it over to you. But a great way to use this thing, we have a number of people that have they've printed this, they've gone to like a Kinko's, and they've laminated this. So you can walk into one appointment, you kind of use your little dry erase, write these figures down with your client, record them after you leave, and then wipe it clean and go off to the next appointment. But the scenario and how we might walk through it, again, called What Do You Have to Lose? Sit down with your client. We're just going to ask them some basic questions. Okay, first off, let's just call them Tom and Judy. So Tom, what is your monthly Social Security retirement income? It's $2,350, and he also has another $1,500 in a monthly pension. He's worked at the phone company for years. He's got this life-only pension of $1,500. Now Judy has her monthly Social Security income. That's $1,275, and her own pension of about $600. So totaled up between Social Security and their pensions, they've got about $5,700 in income each and every month. Now, the question asks, what do you have to lose, or what happens if? Let's say Tom passes away. Now, first off, this is one of the major, I think, surprises a lot of our clients don't know, that whenever Tom passes away, we're going to lose, most normally, the lesser of the two Social Security incomes. So right then, Judy inherits or can pick up Tom's $2,350, but she loses her $1,275. Now, I mentioned earlier, too, that monthly pension that Tom had was a life only. As life only goes, it goes when he does. So $1,500 also out the window. So right then and there, with Tom's passing, we lost $2,700 of income. Now that means Judy still has the $2,350. She still has her $600. That means $2,950 in a monthly income. And right away, everybody says, "Oh, well, boy, that's nice. You know, it's just Judy. $2,900, almost $3,000 of income is still fairly significant." But how many people could afford to give up almost half of your income tomorrow? Just like that, snap of the fingers, wipe away almost half of your income. Not many of us, not many of your clients either. And the argument you'll always get is, well, Tom's going to say, "Judy, whenever I'm gone, it's just you. You can make it on half the income." We really need to kind of debunk that myth because it really isn't true. Now, some things might become a little less expensive, the grocery bill, other minor expenses, but if Tom and Judy still carry a mortgage, Judy can't go to that mortgage company and say, "Hey, my husband died, will you cut the mortgage payment in half?" It just doesn't happen. And then there's a lot of other things that actually increase living expense. Example, Tom was the one that always cut the grass, shoveled the snow, took care of the chores around the house, when something broke. Well, the kids live hours away, so now what does Judy do whenever something like that happens or whenever the grass needs cut? She's going to hire somebody to do it. So again, little things like that are going to add up. But the bottom line is we can't just realistically assume that because Tom's gone, income isn't necessary, or we can afford to cut income in half, especially at a time when Judy's least prepared emotionally as well as financially to deal with it. So again, back to that question, what do you have to lose, and shouldn't we at least be addressing some of these traditional final expenses? Maybe a little bit of extra to help Judy get back on her feet or to kind of become prepared. Now, I mentioned this thing's a fact finder. What's great about it, and where this might come in handy too for your annuity cases, a lot of times you're going to have clients that just start volunteering more information. Well, we have this other annuity product, that's going to help, or we've got this CD, in the bank that we could use for, some of these final expenses. We've got other sources of income. So again, all of a sudden clients start addressing and sharing this additional information. Maybe it's other life insurance policies you can review. But again, it's just a great way to kind of open up that door and get your clients kind of talking about income and expenses. Now, let's move on, and as we do, want to work a little bit more specifically into some of the final expense. Now, OxfordLife, if you do know us, if you're using us already for final expense, again, thank you. And if you're not, I'd say maybe one thing you might know about us, we're a low-cost provider. That really is some of our biggest competitive advantage. If we're not the best premium out there when it comes to final expense, we're certainly there near it. Now, matter of fact, I know there's a few rate increases that just took place with a couple of carriers. So, matter of fact, we'll even need to have this piece updated. Our rates are right there in the blue on the left-hand side of the screen. This is a male, non-tobacco, and it's $10,000 of monthly premiums. This takes us from ages 55 up through age 85. Again, keep in mind those are OxfordLife's rates there in the blue. Some of those other rates we may need to adjust, but you can already see that if we're not the best, we're certainly right there within a dollar or cents of it. Now, inevitably, a lot of people say, well, I just don't sell on premium alone. I sell me and my services and everything else with the client. And that's great, and absolutely positively you should, but there is a real benefit of being a low-cost provider, and that's one, persistency. and that's protecting your business, protecting what you've written. Because as we know, it's not always just what you write, but it's what you keep. And we can attest that we have some of the best persistency in the business, and that is because as a low-cost provider, you just don't simply get replaced. What happens if you've just met with a client 75 years of age, and we're offering $93 for $10,000 worth of coverage? I guess I should flip that. A client's paying $117 for a $10,000 policy, and somebody else can come in and offer it for $93. Or maybe for that same $93, somebody can offer additional benefit to the beneficiary, more death benefit coverage. So it is important, if not being a low-cost provider, certainly being there and having a competitive product. Now, female, same thing. You can see it here on the screen. This is our $10,000. This is monthly premium. This is, again, ages 55 through age 85. We're there in the blue, and kind of some of the notable competition out there to the right. If anybody does want this piece, we do have it available. We have it available in a little bit more detail. It has a number of other carriers included to it. It's just kind of a great way to assure you that we've done the shopping for you. We've been out there, we're comparing our prices with everybody else just so you know how we stack up. Now, this next slide, I can't really call it new any longer. We've had it for a bit, but we still do like to highlight it just because it still goes unused more, I guess, than what we'd like it. It is a Social Security payment date. Now, I know others have now kind of jumped on board and some offer it. I think we were one of the first to do it out there, but really recommend taking advantage of this with your clients. The concept, the idea, basically, how many times have you been with a client and you're looking to match up that Social Security payment with their first final expense draft? And that works great, maybe for the first payment, for the first month, but inevitably the Social Security payment changes and everything else. Well, with this, we're going to change that date. We're going to change that draft along with Social Security payment. Now, I know this screen can get a little bit tough to read, but this is a 2016 calendar. And just for example, let's look here at May. And basically, if your client's birth date, let's say, falls on the 8th, it's May 8th. That means their Social Security payment comes on the second Wednesday of every month. That means for May, they're going to get their Social Security payment on May 11th. Okay, so we've elected May 11th as the first draft. But next month, May 11th falls on a, what is that? It's a Saturday. So, we're going to roll back to the previous draft. So we look at the 10th. The next month, the 11th, falls on a Monday, a couple days right before their Social Security draft payment. So with this idea, you just indicate on the application that you want a Social Security draft date. Now, we're going to draft on that date each and every month. So in May, we're going to draft on the 11th. In June, we're going to draft on the 8th. In July, we're going to draft on the 13th, so on and so forth. So the concept, I'm sure everybody gets it, but hey, we're going to draft on the day that Social Security payment hits, assuring that as long as Social Security payments are good, so is your client's draft payment. So it's going to improve your persistency and as a result, your trail commission as well. We've had this long enough now to say that, hey, this really works. Take advantage of it. Just indicate it on the application. You can do it right then and there, just a Social Security draft option. And again, it will most definitely help your business and the persistency as a result. Now let's talk a little bit more specifically about the OxfordLife product, some of the product specifications. We do issue ages 50 up through age 85, and that is age at last birthday. Now, or age actual, I guess, is maybe a better way of saying it, current age. We do rates based on male, female, standard, and preferred. And this might be our most popular question, I think, when it comes to product. This is our only classification. It's male, it's female, and you're either a tobacco user or non. If you're non-tobacco, there is no other question on our application that will flip someone from preferred to standard status. If you're non-tobacco, you're considered preferred on our application. In addition, we do no banding. There's no graded, there's no modified. And people have really come to appreciate this with OxfordLife. It really is black and white. You're either tobacco or non-tobacco, and you're either approved or you're going to be a decline. You're going to know right then and there on the spot with our point of sale decision. But there's no waiting around wondering on a decision. There's no waiting wondering if, hey, you make it the next 2 years, it's full benefit. Or it might be return of premium, prior to that, with a modified, a graded option, anything like that. Nope. Once again, if your client has been approved and you're going to know right then and there before you leave them or they leave your office that they've been approved, if approved, it is immediate death benefit. So again, no banding. Now, we do annual, semi-annual, quarterly, and monthly payment options. If it is a monthly mode, we do ask, or that does need to be a draft from a checking, savings account, but some form of an EFT payment. We can do direct bill for quarterly, semi-annual, or annual payments. We do face amounts of $5,000 up to $30,000 of coverage, and that does build some cash value that you can use for policy loans, etc. Keep in mind, it's final expense, so it does accumulate and build cash value somewhat slowly, but again, it is available through a policy loan feature if necessary. And then again, this is a level death benefit and level premiums. Now, I'm going to take just a quick second to highlight the Assurance One, just because this product is so similar. Its issue ages, it goes 50 to 85. Same thing, you're either tobacco or you're non. However, as we pointed out, Assurance One indicates one payment, one single premium option to pay for it. We do face amounts of $5,000 up to $30,000. Again, this one does have cash value, a little more significant since it is a single premium option. It's there right away. And again, it's a level death benefit. Now, it's worth highlighting with this product because we always, and it is still kind of a new product for us, but we still so often get people that say, gosh, it's a nice idea, but I just don't have clients that want to write a check or can afford to, I guess, stroke a check for, $5,000 of final expense coverage all at once. And that really isn't the idea of Assurance One. The reason it was built, it was just so much request for a low single premium, I guess, if you will, final expense option. It's kind of a spin-off from our advanced wealth transfer. That's a larger single premium, as the name indicates, advanced wealth option. People that just want to leave larger sums of money, maybe other than an annuity. Hey, I've got this CD, $50,000. I just want to leave it to the kids. Maybe I use a single premium whole life product. We've got advanced wealth transfer for that. But where Assurance One is really going to hit a home run, it's that client, again, looking for a smaller face amount, $5,000 to $30,000, but you've met with them or they've approached you. Maybe you've uncovered life insurance in that what do you have to lose piece earlier. But it's a situation where it's a 75-year-old client, let's say, for example, and $3,000, $4,000, $5,000 of cash value in this old UL, but she can no longer afford the payments. And what's going to happen? Well, the cash value is going to be eaten away towards that premium. The policy is going to blow up. Or again, they just can't simply afford the payments. Well, here's a great opportunity. You can take that $3,000, $4,000, $5,000, or in some cases, again, obviously more significant, but that cash value inside of that product, you can 1035 it in a tax-free exchange over to Assurance One, and with that same underwriting process, that same point of sale decision, approve or decline on spot, get a paid up final expense policy for your client. So again, this is more of a rescue product. It's not meant, well, it can be, but it's not really meant for that client just to give you a check for $5,000, $6,000, $7,000 at a time. think of it whenever you've approached that client or you've got that client with that situation. A policy, some cash value inside of it, they just simply can't afford it or they don't want to continue to make premium payments on it. 1035 over to Assurance One, it's one single premium policy. It's your paid up final expense option. And that's really where this thing has been extremely successful. Because again, face amounts of 5 up to 30,000, that's a face amount of $5,000. That means in a lot of cases, depending upon the client age, we can go as little as $2,100, $2,200 of premium to get to a $5,000 minimum face amount. Now, OxfordLife, a few ways in which we're different. We understand the importance of saving time and money for both you and your clients. We're going to try and be quick at everything that we do. We're going to do a 48-hour policy issue. Once we've got a good policy in hand, again, double check that application before you send it off to us. But if we get a good app in hand, no outstanding requirements, anything like that, cross those T's, dot those I's on the app. But again, a policy in good order, 48-hour issue, it's going to be on its way back to you or to your client within 48 hours. That means we get you paid quick. We do a daily commission. So again, once that policy has settled, we're going to pay commission on it. So if let's say on that Social Security draft, we don't draft it until the 11th, which I know is just around the corner, but you get us a policy today, that thing's going to issue and pay you on Friday. So again, it's going to be on its way back out the door, sent to you or your client by Friday, assuming everything's in good order, and your commissions are paid on it. We'll do a 6-month advance for assurance, or obviously as earned. Some other services which we have, online inflation calculator. We've got a mobile app for your smartphone or tablet. You can get instant access to rates, and that's for any of the OxfordLife products. Definitely recommend, if you've got your smartphone handy there, just go out to your store, your app store, search OxfordLife. You can download our mobile office. From there, you can check your new business, pending requirements. You can check your commissions. We've also got a tab where you can quote any and all of our products. You can you can quote the MedSup, the final expense, the single premium life, even the annuity rates, all available there for you. We also can faxed applications. We don't need any kind of an original, so either fax or scan and email those applications to us. So again, go out, see a client today, fax it, scan it, mail it off to us a little bit later. Again, 48-hour turnaround, we're going to get it issued and on its way back to you. Other things we make available, we've got nice memorial planning guides. Those can be a great referral source. Number of ways to take advantage of those. Then I mentioned a little bit earlier, we do a number of different things too, as far as like final expense flyers, different pieces available that we can help personalize. Now, one thing with us, I've already alluded to it, but it's a true point of sale approval decision. We're sales oriented. We're going to get quick decisions for you. You're going to know if the policy's been approved before you leave your client's home or again they leave your office. It's a simplified application process. There's no medical exam, there's no blood work, there's no request for medical records. Your client answers health questions on the application. We complete a brief telephone interview. You can see right there at the bottom the average interview time is under 15 minutes. But again, keep in mind that is the complete underwriting process. We read off an MIB disclosure so that we can run MIB at the time of sale, so that we've got that completed, so that we can guarantee a decision. It's quick, convenient, and innovative. Again, there's no request for blood, urine, anything like that, medical records. We're going to knock this thing out right then and there, on average 15 minutes or less. Your client's approved, you know it. If necessary, we've added this to the mix recently, but maybe you don't have time to stick around for that extra 15 minutes. Highly recommend that you do. But if you don't, you can schedule an interview time for a later date. We'll go back, we'll contact your client at that point in time, that date, that time that you gave us, and we're going to call you back with the decision. Now, we're often asked, do we have an underwriting guide? And really, the application is our best guide. It's simplified issues, so it's rules-based underwriting. This is a front look at the application here on the screen, and I know it's tough to read, but just keep in mind, get a copy of our application. We've got 14 questions that are considered knockout. If your client answers yes, and I guess not even that, one of them is a height weight, which I've got a build chart on our next slide here. But if they answer no to those next 13 questions, 9 times out of 10 they're good to go. We're just going to confirm those answers then in the telephone interview. Dial up an 888 number that's right here on the front of the application. They're going to ask you for your agent ID. They're going to ask you a couple questions. They're going to turn the phone over to your client. And again, in 15 minutes or less, you're going to have that decision. But again, the questions on the application identify any of the conditions for decline. Most of those things are going to be 24-month look back. If your client had a heart attack, cancer, or anything like that, and if it's more than 24 months ago, if it was, just one occurrence of it, we're fine. Heart attack, cancer, all those items. And everybody always asks, do we have a sweet spot? I guess I'd have to say it's diabetes. We're really friendly on diabetics and our question number 5 and how we look. But again, it's certainly an area at least to keep us in mind because again, it's going to be either preferred or standard based upon that one question, and that's your tobacco. So if you're, again, non-tobacco, no matter what other conditions, if you've answered no on these things, you're likely going to qualify, and it's at our preferred rate. Now, I said the next slide, but predictable underwriting tools to help your persistency. Here's your height weight chart. Again, a little bit tough to read, but just know we've got it available for you out there. We can send it. You can download it from the website. But I think you'll agree it's pretty fair. This is our unisex chart. You can pre-qualify any of those policyholders based on the chart here on your screen. And this would be for any and all of our life products. Now, we also have a drug list, a prescription list, and we've really it's still available. You can download it from our website. We can send it to you. We've started to really started to work away from even using a drug list, just because, as our underwriting team says, we're impairment driven, not medication driven. There really is no drug that would decline a client. It's the drug that indicates to us there is an impairment that we're not seeing, or there's an impairment with the client that maybe didn't come out on those questions. But we do have a red drug list, and these will not be automatically declined. Just keep in mind, if you've downloaded the drug list, the prescription list, if it's a red drug, we're going to ask about it. It's certainly going to be come up. It's going to be questioned. But all correctly completed applications with no answers on the health question should be approved, regardless of the medications being taken. We're just going to use that telephone interview to seek additional information on the use of the medication, determine the condition for which it's being used. So again, we just want to say, okay, we see that you're taking this, because again, we're doing an MIB and we've done a prescription check. We know that a client's taking this specific drug. We just want to identify and we just want to make sure why. So again, pre-qualify your clients, make clients aware of the details of the condition, injuries, and illnesses for which all of their medications have been prescribed. Because again, we're going to see those medications. We're going to ask about them. So it's going to help your interview go so much more smoothly, so much more quickly if you have any and all of those things available. Now, should you hit a hiccup, we do have a dedicated underwriter that's available to take calls for any situation here listed. Maybe it's an issue related to pre-qualification. You've got a client, you're wondering, is this going to fit? Will this work? Should I bring this risk to OxfordLife? Call up our underwriter. We'll let you know right then and there whether or not it's a good risk or whether or not we anticipate it's going to be approved. It's a borderline scenario. Maybe it's a question on a specific issue. It's a question on a specific drug. Or maybe you had a decline. any decline, you have an immediate option to refer it to an underwriter. They'll let you know right then and there again, we're sorry, this case has been declined. Would you like to appeal? Would you like to refer to underwriter? Say yes, because in any and all of those cases, it'll immediately pass over to our underwriter, and in more than half of those occurrences, our underwriter has been able to grab a little bit additional information, take a little bit longer look at that case, and been able to overturn it for an approval. And again, within typically 24 hours, you're going to be notified. Sometimes we've even had people say before they've left the client's house, they've had a call back on the appeal, and it's been overturned. But again, within 24 to 48 hours, you're going to get your response. You're going to get the decision on that appeal. So again, it's certainly worth taking advantage of. Now, our steps on the approval process, we do, again, ask, pre-qualify that applicant. We do still expect a face-to-face interview. You've met with the client. In all of our cases, we do a recorded telephone interview. We do have to have that completed, whether you're there with the client when it takes place or we've scheduled it for later. But we do offer, if you're doing that point-of-sale interview, an immediate point-of-sale decision. You're going to know 100% of the time that the client's been approved right then and there, unless, of course, you appeal and take it over to the underwriter, I guess. From there, again, you can fax, you can email, or you can scan that application over to us. We're going to get that thing processed, issued, if in good order, 48-hour turnaround for you. Now, our point-of-sale approval decision, no need to write this number down. It's on the front of the application, but it's 888-801-5123. Their hours of operation, they do 8 to 9:30, that's Central Time. That's Monday through Thursday. They're 8 to 5 o'clock Central Time on Friday. If it is after hours, maybe it's a weekend, you can leave the client number. They'll contact the client back the next business day, and then they'll contact you with the decision. So it's a Sunday evening, call, leave the client name and number, leave your agent ID. They'll contact the client the next business day, and they'll call you back with the decision. Now, I do recommend you write this number down. This is Amanda Clausen. Actually, I shouldn't say Amanda. We've now added to this team, but Amanda kind of is still the head underwriter, if you will. But her number, it's 888-837-3387. That reaches them directly. Again, 888-837-3387. And this is, again, the dedicated underwriter for any of those questions we just talked about. You want to make an appeal, you've got a pre-qualification question, anything like that, you can contact them at that number Monday through Friday, 8 to 5 o'clock Central Time. Definitely a service to take advantage of. I can't talk enough about it. We hear all the time from Oxford Life producers how great the service has been, and really how surprised, I guess, they've been at a number of the clients that will take, I guess maybe that's a fair way of saying it, or a number of clients that worked out on our application. Other numbers to take down, hopefully you grab my number at the beginning. If not, I'll put that up here in just one more second. But if you have any further questions for Oxford Life, you can reach us directly, myself included, at 800-308-2318. Again, 800-308-2318. That reaches us Monday through Friday. That's Mountain Time, 6 to 5. That's Arizona time. Or again, my number or any of the other regionals anytime you might need us. Now, before we go, or I guess before I turn it back over to Mark and wrap up here, I just want to pull up one more slide. Oxford Life, we've always done a trip for your as an incentive for your business. We did away with that for the first time in I don't know how many years this year. We're steering away from a trip, but we're still offering an incentive. So there is still a qualification, Mark, but now it's your choice. You qualify, and final expense, just final expense. All of your Oxford Life business will count towards it. But if it's just final expense, it's $60,000 to qualify. But now you can use that bonus, I guess, in one of three different ways. You can use it for lead generation. We'll offer you a reimbursement for marketing expenses, lead costs, direct mail, seminars, whatever you might be doing. You can use it as a travel incentive. Go anywhere you want to go, anytime you want to go. You can use our travel service, or again, we'll just help reimburse the expenses. or you can just take a straight cash option. Don't like any of the above, you can take a certain percentage of that bonus and you can just use it as a straight cash bonus. So again, this puts a lot more flexibility in your hands, but certainly a lot of great potential incentive. You can earn up to $10,000 a year in incentives from this particular program. So it's extremely rewarding in our way of saying thank you. So, and again, Oxford Life, any and all business will count towards it. So, also just want to say thank you, I guess, before we wrap up, and anybody might jump off the line here, but thank you, Mark. Thank you, Messer Financial, again, for the opportunity to come on here today. I think I went a little bit longer than expected, but I'm going to turn it back over to Mark, and hopefully we still have some time for any of those questions that may have left unanswered here during the webinar. So, Mark, I guess back over to you.
Again, thank you very much, Chad, for a very informative presentation of Oxford. Again, ladies and gentlemen, as always, I'd like to take a couple of minutes, and we have enough time here, to review some of the bullets, some of the high points. And I would say, first of all, recognizing that, yes, we spend time on the final expense product, but being aware again that this is not just a final expense company. Some of the states that you're calling in from today, I can note, and I recognize here as I'm in Charlotte, just outside of the state of South Carolina, I can't tell you how often I've referred back to the Oxford product on their Medicare to go into South Carolina and be highly competitive. Also, I was very pleased to hear, Chad, that you guys are soon going to bring that G plan in, because again, I think that's going to have a great impact on those of us out there selling the Medicare supplements. If you would, Chad, could you just one more time highlight that annuity with the 10-year product?
Absolutely. Yeah, Mark. And I tell you what, if everybody, hopefully I've maneuvered correctly to the screen, but it's OxfordLife.com. If you want to check out anything at Oxford Life, really there's not a lot of password protection here to check out product information. You can go and pull down forms. You can pull down that app. You can check out some of the annuity rates. And really when it comes to some of the multi-year guarantees, that's the most important thing. But here are some of those Oxford Life annuities. We offer a 10-year product, a 3 through 10-year product with some of the best rates out there from an A-rated carrier. The 5-year, as an example, it's 2.65%. The 10-year goes up to 3% guaranteed for 10 years. And then probably one of our bigger, better sellers, it's a true 10-year annuity, a 10-year declining surrender charge schedule with a real upfront 8% bonus. We do recapture the bonus if the client leaves early, but again, it's applied upfront day one. You put $100,000 in today, you've got $108,000 right out of the gate.
Excellent, Chad. Thank you. Again, too, back on to some of the highlights of the information. That tool for uncovering assets, that's just wonderful. If you've not seen anything like it, and maybe you haven't, I hope you haven't, and you want to get aboard and get that in your ammunition, so when you go in on these sales, you do have one step ahead of your competition out there. So please do take advantage of that. And again, knowing, and it is true, that cost comparison of Oxford being one of the lowest, if not the lowest, providers in the business arena is absolutely true. So another good reason why, if you have not yet taken advantage of that and contracted through the Messer website using our agent resources tool, going over to contracting, dropping that down and opening up the Oxford, or getting into the contract tool itself and choosing Oxford as a company you would choose to be appointed with. Obviously, it's very important, as is with all carriers, with the final expense product, you need to be approved prior to taking any applications. So make sure you take the necessary time to go through that approval process. Also, I'd like to add that, when you're going through that and you're looking at the different benefits, again, that we've had made available to us today, that schedule on the Social Security benefit payment. That's going to be very handy. And most importantly, as Chad brought up, it's going to help in your persistency. And if you're in this market of final expense, you know that unfortunately there can be business, and quite a bit of it at times, fall off the books. So you do want to find a way to enhance your opportunity and eliminate as much of that exposure and keep those sales on the books. The single premium payment, I want to talk a little bit about that product, because when it came up, and it's so important for agents to understand, especially right now. As Chad brought up, there's a lot of baby boomers coming in every single day, 10,000 a day, turning 65. And my insurance background tells me that I need to bring to your attention that, what took place in the 1980s with those baby boomers, and let's take one of them. They're 30 years old in 1980, and there's a thing going on out there, and I won't go into the company, but they're talking about buy term and invest the rest. And that's changing the scenario on the insurance carriers. It forced them into a position where they had to go out and find another product. They were losing their whole life permanent business to the idea of cashing those out and going to term. And that's where the universal life product became developed with the premium flexibility. Now, unfortunately, a lot of those products that were sold at that time are at that point right now, 35 years down the road, where they've been imploding. And those people that bought those products find themselves now at age 65. They have an insurance policy that's not very good. It's not going to be any good to them because the cash value is being diminished every year with the cost of insurance. You have the opportunity to be a hero. You have the opportunity to go in there, dig and do your work, find that is an existing situation, and turn around and show them how they can save that and increase that death benefit, certainly not to what they had originally contracted for, but at least to give them more bang for their buck. So again, it gives you the opportunity to be a hero. Another thing I'd like to touch on, one thing, again, we're getting pretty close to our 10 o'clock time zone. When Chad mentioned the simplified issue in the sweet spot for diabetes, just going to take a second here to read you that question, number 5. Have you been treated by a licensed medical provider for insulin shock, diabetic coma, or ever taken insulin shots prior to age 50, or diagnosed by a provider with diabetes prior to 30? So think of how many clients you're going to run into, especially today, that have been diagnosed diabetic. They are on metformin, or perhaps even insulin. They've never gone through a shock issue, but you're automatically thinking they're not going to qualify for these products. That's the question. That's the simplicity. That's the sweet spot that you need to take advantage of. Also, I wanted to bring to your attention, when you do go to our Messer website, you can use the resources that are there. You can go to our product lines. You can find Oxford. You can find in there the applications themselves that are generic, or the applications that are going to be state-specific. So you can get ahead of the game, look at some brochures, look at flyers. It's all there for you before you even do your contracting. But again, primarily make sure that you get that contract in order. Chad, I know you've been throwing a bunch of things up there. Is there something else you wanted to throw at us here today?
No, Mark, I'm sorry. I was just going back, highlighting a few of the things maybe mentioned during the webinar. A few things to take advantage on the site, a place where you can find a couple of those forms. So.
Okay, great. Again, ladies and gentlemen, thank you very much for taking the time today to be with us. As always, Messer would love to see you bring us a piece of business. And if you'll do that in the next 30 days, get that business in. And again, it's going to be approved or disapproved, obviously, on that call-in interview. So you should have no trouble meeting our normal 60-day window for appointment and approval. That first application, that's going to bring you a $75 bonus on top of your commission. So get with it, get on it, good selling, and we'll see you next Wednesday with our next webinar. Chad, again, thank you very much.
Thank you, Mark.